All right, I think that's my cue to go, correct? Very good. So I'm Mike Federley, the CEO of Forbes. Appreciate you coming to hear our story. We're in the midst of, we're merging with a SPAC, Magnum Opus. Our date is set for May 31st. We assume we'll be done with everything, SEC approval and the whole bit, and be public on the NYSE then. So let me take you through a bit of our story here, and I'm with my colleague Michael York, who's our CFO at Forbes, and he'll take all the hard questions. So disclaimer pages, I'll let you guys go through that at your leisure. A quick overview of the company. We're 105 years old, media company, mostly family owned the whole time. A lot of people ask me, how have you remained relevant for 105 years? And I really think the key to it is that we've been very consistent over the 105 years of what our mission is. And it's always been to give people the knowledge and the resource, the inspiration, and the connections they need to achieve success. And hold on to that word success, and I'll get to it in a minute. But before I do, let me jump in just a couple of the key investment highlights. Why many people were interested in Forbes and why Magnum Opus, the SPAC, chose us as a target. First of all, we're an iconic global brand. Again, 105 years history, a lot of trust built up in that brand. We have an expansive reach of 150 million monthly uniques across our ecosystem, which I'll explain in a bit. And increasingly, we're focused more on proprietary data and analytics across this audience with our Forbes One platform, first-party data. We're a high-growth, high-margin, and cash-generative business. This is not one of those investments that's all in the future. We see growth there. We're in a high-growth phase now and see that continuing. Our 2021 financials, which when we went into this, we did not have yet, but they showed revenue growth of 40%, adjusted EBITDA growth of 86%, and 70% free cash flow. So very solid business, and we're looking into 22. We're off to a great year and anticipate another significant growth year. We've been working on, for the last decade, really improving the business mix to this high growth consumer segment. That's going to be a lot of the presentation today, which I'll take you through. And finally, for those of you who were in the Metaverse panel this morning, you know that Binance, the largest crypto exchange, made a $200 million investment in Forbes, and this, we think, presents us with a lot of digital asset opportunities in the years ahead. So I've worked on dozens of brands in my career in media. I'm a 35-year veteran of the media business. People always say, hey, the media business has changed so much in the last few years. That's not true. It's always changed. For 35 years, it's been a constant state of change, and you have to be quick to innovate and change with it. But among the dozens of brands I've worked on, I've never encountered a brand like Forbes that has what I call brand elasticity. It means, wealth, it means business, it means finance, it means lifestyle. It means a lot of things to a lot of different people, but if you distill it down, it comes down to one word, which is success. And if you saw by that mission statement, that is our mission, is to help people be successful. It's to celebrate those who've already achieved success and to help those who are looking to achieve success. And with that, when you do achieve success, you might be on one of our lists, whether it's a young entrepreneur under 30, a extraordinary female executive over 50 who did great things later in her career, or on a VC list like the Midas list or 400. We give validation to success across all different metrics and platforms. Now, just give you a snapshot of our business. If you look, we basically have three buckets of business. There's the media business, which is the advertising business I think most people are familiar with. People still think of us as a magazine company. Magazine revenues are about 5% of our total revenue these days. So we have successfully made that digital transformation years ago and have successfully right-sized the print business to the consumer demand for print. Brand extensions is a licensing business for us. We have 40 licenses around the world in media, and then other several licenses. Has conference businesses in there and some original research business. And then the consumer business, which again is going to be the focus of some of the presentation today. And this is anything that is consumer facing as opposed to advertising driven revenue. So where consumers are paying the bills there. I'm going to skip ahead here. I could spend hours on this slide, but over our history, again, what has made us successful, and for those who saw Steve Forbes' intro video, it's always been a willingness to innovate and a quickness to innovate. So that, I think, has been the key to our success, and certainly through the digital transformation. Quick snapshot of the audience for those interested. As I said, 150 million within our ecosystem each month, so a very large audience that we've developed across broad content, menu of content. And 42 million, as you see in social media, are followers of us on social, which is really important in today's media world. And that's where sharing happens and where you also build up loyalty for all those people who choose to share the information and connect with you directly. We also have this expansive reach. We're about 50-50 female-male, which is a reflection of the modern or the current business world. And we have high-value cohorts. That means we reach the audiences that advertisers pay the most for, whether they're C-suite executives, high-net-worth individuals, and other desirable targets. We also have the leading position, as you see a snapshot of competitors here, across monthly uniques, household incomes of more than 100,000, C-suite management, and then also across the 4 age cohorts that marketers want as well. And that gets a bit to that brand elasticity that I was talking about. We can attract a younger audience as well as the older audience in business. This all leads to really a blue chip advertising client base that we have across all these categories, luxury and technology, financial and consulting. It's driven by not only our large digital presence in Forbes.com, but also innovative products like Brand Voice, which ushered in a whole new category of advertising called native advertising. And that's been a product for 10 years. It's been on a growth trajectory and continues to grow for us. So now this consumer conversion that we're focused on and that can drive totally new revenue for us in the years ahead is over the years we have built up a technology base that now allows us to really go deep on data and analytics. We have 600 plus unique data points on each user, 1 billion total global users in the data set over the years. And when we use this first party targeting, we see an uplift of over 100%. I'll show you this in a second, some examples. So the idea is with these data and analytics, where we segment this large audience base, 150 million, we can segment them into audience cohorts and different desirable targets. We can then create custom content specific to those targets based on what we know through the data and analytics. And that creates both a more engaged user and reader of Forbes, and also a much richer target for marketers trying to reach them, as well as the ability for us to create new custom products, such as the ones down below, which I will take you through quickly because I want to be aware of time. These are 4 products, 3 products that are in the marketplace and already delivering significant revenue for us, and 1 product, QAI, our robo trader, that is our robo trading app based on artificial intelligence is in the pipeline and ready to come out very soon. So to give you an example of this consumer conversion, one small slice of our audience is financial advisors. So every year Forbes puts a list out of the top financial advisors based on assets under management and how well they've done in the past year. And from that ranking, we then do an annual conference that comes right after the rankings, celebrate the winners, but it's for the whole industry. That creates several $1 million in revenue for us as a conference. But then we take what we know about these financial advisors and what's important to them, again, through this data and analytics as we see how they work and use the site and the content they're interested in. And we've created a profiles product that is like a LinkedIn profile on Forbes, only more exclusive because you have to be in a list in order to be on the profile. And that in itself will, that then allows them to customize this profile and use it for marketing purposes. The testimonials here are telling you that it worked very well, that they gained assets under management of $33 million on a $10,000 investment in this profile on Forbes. For us, it's a new product that we can replicate across various audience segments and lists that we have. Shopping is just e-commerce, which is kind of low-hanging fruit that kind of went from 0 to 17 million in just a couple of years in terms of new revenue. That's an affiliate advertising program. We also have Forbes Marketplace, which is a joint venture with a bunch of SEO specialists who, and it's an advisory service on best credit cards, best insurance, best mortgages to buy, and it's a cost per lead model, which has also gone from 0 to 40 million in just a couple of years as well, and will be on a significant growth trajectory. And then the QAI, which I mentioned, is an AI-powered robo-hedge fund for the retail investor. It's a very sophisticated trading strategies that is kind of moving beyond the do-it-yourself to hands-off trading. And this has garnered all sorts of awards before it's even been launched. And as you can see, when you look at the comps on other apps that are out there, this we have high hopes for in terms of increasing a ton of value in Forbes. So all of this is about this transformation story from print to digital, which happened over the last decade, and now to the consumer. Again, as we've gathered this very large, loyal audience, we are able now to start introducing new products and very bespoke and targeted products to them. So as you've seen in 2010, we were 95% in media, and 51% of that was built around our print business. So that print business has come down. Obviously, we've managed it down at the same time as the rise of our digital business. And then also we've added in consumer and brand extensions so that by 2019, you can see the pie chart there. And by 2021, you can see that huge growth in the consumer business. This we see continuing into the future, and we'll continue to reapportion that pie. Now, the overall pie is still growing. We're big believers in advertisers, in advertising as a growth business still, unlike some of our peers. A modern media company is built on technology. You have to have a technology foundation, and we have invested a lot of money in proprietary technology tech stack that we have built. We built it ourselves because there was no off-the-shelf product that would do the things that we were trying to do. And the primary tech stacks that we have is our first-party data, our publishing CMS stack, Birdie, our ad stack that delivers over 1 billion ad impressions annually. And then upcoming innovation is primarily around, again, this data, where we create all sorts of models of look-alike personalities and try to build personas and profiles around our readership. Now, in the first-party data, this is a big deal in the industry as third-party cookies go away. And the return on investment on this is, as we lay in a first-party data layer into ad buys, we see a lift in different categories, from luxury, as you see, to pharmaceutical to consulting. And overall, we see an 18% delta from first-party data to third-party data in our buys there. So, as I said this morning, we see a huge opportunity in digital assets, or Web3. And about a month or so ago, we announced Binance, the largest exchange in the world, has made a investment in Forbes, $200 million strategic investment. They've come into the pipe in the SPAC. They're subject to the same one-year lockup as the sponsors and the rollover shareholders. So we have a full alignment on a long-term commitment to Forbes. And on the strategic front, they're a financial investor with us, but with strategic resources. We've already started to work with them on potential new products. Their interest in us is that Forbes can be that great communicator of bridging all those people, the early adopters, to those who are curious about crypto and decentralized finance, to those who have no idea what it is at this point. And that is part of what Forbes' mission is. Clear synergies between us, which we like. And on the board, on an operational level, they're going to take 2 seats on the new public board, with formation of a steering committee on that, which will kind of steer us into this brave new future we talked about this morning in Web3. And if you look, we're excited by this, because if you look at the kind of the curve in the adoption of the internet, it mirrors this almost exactly the same. So you can see, we feel we're in the very early innings, but of a huge new shift. And then we're also well positioned to drive digital adoption, again, as Forbes creates that bridge between those who are deeply engaged in Web3 and native, and as well as the traditional, all those who are not yet well aware. And we're going to drive the consumer enterprise adoption across Web3 with our news and editorial. We have an NFT foundry, conferences, all these different things are going to lead to us. I'm going to speed up here because I can see I'm going to run out of time in a few minutes. This just to say, last week we launched a new NFT initiative on the FTX platform. We had 100 virtual fictitious billionaires that we gamified to let people buy an NFT of this fictitious billionaire whose portfolio is on the New York Stock Exchange and is a real portfolio of stocks. And they can trade and sell these. We opened it up to our subscribers first to give them, as members of the Forbes community, give them the first option to buy it. It sold out in 10 hours. And now in the aftermarket, they're trading. They were about $750 up front, and the latest trade was about $9,000. And we tag on the trade, we get a 10% resale on each trade that goes on. So this is more an experimentation for us at this point in terms of engaging our audience in ways that we haven't in the past. We're also doing the metaverse I mentioned this morning. We've got land and sandbox, and that I consider a bit of R&D as well, but there's some really natural extensions going into the metaverse around our live events and that we can replicate. Mike, you want to take on a couple financial slides
Yeah,
here?
absolutely.
Good. You got to speak fast.
Thank you. It's an honor to be here in front of you guys today and to share this great story.
2021 was a historic financial performance year across Forbes' 100-year history, both in terms of top-line revenue, adjusted EBITDA, record amounts, and effectively every single facet of our business contributed to the growth over the last 12 months, and that would be in our media category, our brand extension, and our consumer category. So you can see revenue grew 40% up to $259 million, and our adjusted EBITDA at $60 million was up 86%. Now, as we're seeing parts of the business in our revenue mix shift from traditional media to brand extension and consumer products, those products inherently return a greater on the investment. So we're seeing our blended margins increase. So in 2021, our margin at 23% was up 4 points over pre-pandemic. And if we can continue and act on our growth plan going forward, those margins should continue to increase. This is just another slice of 2021, if you will. What I really want to point here is you can see the marketplace column. Mike talked about that a little bit earlier. This is a great test study in a sense that there's an editorial product with a large addressable market coupled with the Forbes brand name and the brand reach. And over a 24-month span, we did $40 million plus in revenue and a 25% margin. So there's tons of opportunity there. We're mostly focused on our organic growth strategy. We've never really been able to dabble in M&A because we really haven't had the liquidity. But now, going IPO, we're supposed to have $145 million of cash on the books on day one. We have very little debt. So those are two building blocks that will really help us compete in an M&A space where if we feel like there's something there that will add significant accretive investor value, that we'll certainly listen and could certainly help us out. Back to Mike for some closing remarks.
I see we have about 2.5 minutes. So Magnum Opus is the sponsor of the SPAC, and in my closing remarks, I just wanted to reiterate why they looked at us as a target that was so desirable. As they looked across the media landscape, they saw it as a strategic and scarce asset, one that had the history that we had of innovation and transformation from print to digital, and now into this data and analytics-led consumer path we're going down. Thematically attractive on the forefront of consumption and technology, and again, that underlying base of technology is really what sets us apart from some of our competitors, and a real leadership opportunity in digital assets and Web3. The strong foundational elements that we have of our business with revenue growth, scalable margins, and free cash flow generation, and well capitalized with multiple avenues of shareholder and creative value creation and support from strategic shareholders. And the public market ready with a track record of delivering against expectations, led by a proven management team, of which you're only meeting 2 of us, but you'll have to trust me, and a compelling valuation versus public comparables. And I would dare you to go look at the comparables at this point, and you'll see what a very solid deal this is. The estimated sources and uses of this, I'll let you guys go through this, but it's really just say the shareholder equity rollover. The current shareholders are going to maintain a good position in the company here, and as a real belief of our value going forward and creating more value here. And you'll also note that as this deal and the enterprise value, the metrics per projections in 2021 that were used to value the company were quite lower than the actuals that came out in 2021. So again, the value of this deal is only increased when you look at it on a comparable basis. So with that, I'll thank you very much for listening to our story, and we don't have any time for questions, I guess. But thank you, and you can catch Mike and I in one of the tables here during the afternoon. So thanks again.